Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. This week, I'm going to tell you the secret to supercharging your returns with small caps. Look, this has led to us generating big, very big returns, 10 to 15 fold on our initial investment from stocks like the Tudor Hope founded Macquarie Technology, David Teo's Tuas, Bill Beeman's Northern Star, Jake Klein's Evolution Mining, Nick Scali. Okay, some of the big returns are founder-led. That's true. And we like founder-led companies, but many more aren't founder-led. Like recently, we've made sevenfold or 600% on Gentrack. We've made big returns on Data3. We've made big returns on Austal, as well as big lithium stocks like Pilbara Mining. What I'm talking about is simply the power of exchange-traded funds or ETFs. Let me tell you why these are supercharging the returns of small caps. Like, it's a fascinating story. 20 years ago, ETFs weren't in existence, or not materially. In 10 years, they have exploded in value to the point where now almost 50% of the buyers and sellers in the market are ETFs. And most of these ETFs are passive funds. So these are simply funds that whose buying and selling is replicating benchmark indices. Like in Australia, that's the ASX 200 index, that's the ASX 300 index. In America, it's the S&P 500, it's the NASDAQ. So ETFs give you the cheapest form of diversification that's available. That's why they've exploded in value. That's why people love them. That's why we include them in our $500 strategy for building wealth. But what they also do is buy stocks solely on the basis of their weighting in an index. So this pays no regard to fundamentals, revenues, cash flow, profitability, balance sheet. That's irrelevant. These guys are just buying on the percentage of the index that a company represents. So small caps in the main are excluded from this buying. That is until they get included in the index. And when they do, it means a huge amount of buying. So small caps in the main are excluded from benchmark indices. So that is until they aren't, until they get included, which lies behind the big returns that I was talking about above. These stocks just got included into the ASX 300 index. So there's potentially even more buying that could happen if they get into the 200, where the serious money is. So their inclusion into the index is a big deal. It means a big percentage of money that's out there is simply buying them on the basis of their weighting in the index. Hence, these stocks can get more and more expensive than is justified by their fundamentals. That's the phenomenon that we've seen at the big end of town and has led to, a massive selling. So these big cap stocks, Nvidia down, that are in the index, Tesla included, like all of them are getting hit hard because now there's economic fears and these stocks weren't valued. So, the selling has ratcheted back the valuations of these stocks. That's why we're seeing so much action at the big end of town. But what we're also seeing is investors gravitating into those stocks where there is value, and that includes small caps. As I keep saying, the individual investor's biggest weapons are buying cheap and exercising patience. The money is made by buying cheap stocks and holding. So we're looking for the future Gentracks. We're looking for the future Nick Scalis. We're looking for the future Northern Stars, because these stocks are trading at value prices. And then one of two things can happen because, there's good value there. They get taken over. And let me tell you, 1 in 5 stocks that we've covered get taken over. Or if they keep performing, they get elevated into the index. It might not happen much, but when it does happen, it transforms the wealth in your portfolio. It transforms the valuation of your portfolio. That's what it's done for us. We've delivered an average 80% return on our 300 plus stock recommendations over the past 13 years. So next week, we've got a ready reckoner of all our 100 plus small cap stocks that we cover with our buy, sell, hold recommendations in one easy to read report. I promise you it will be worth your while.